Okay, let's try and unpack this Uber situation. They just dropped their latest earnings, and honestly, the numbers are, well, they make you think.
Yeah, it's a bit confusing on the surface, isn't it?
Totally. I mean, they announced this huge profit, $1.78 billion in net income. That's a massive swing from losing over $650 million this time last year.
A huge turnaround. And the earnings per share, the EPS, that blew analyst expectations out of the water.
Right. You'd think champagne corks popping, stocks soaring, but nope, the stock price actually went down. So what's going on there?
Well, that's exactly what we want to dig into. This apparent contradiction. You've got this really, really strong profit, but the market reaction was negative.
So for this deep dive, we're looking at Uber's official Q1 2025 report, right? And some analysis from places like Music Plus Essentials, Investopedia.
Exactly. We've got the press release, the supplemental data, and those analyses. Our goal is really to get under the hood and figure out why this happened. Cut through the noise a bit.
Okay, let's do it. We want to understand the real drivers here, not just the headlines. So, starting with that headline performance, $1.78 billion profit. EPS way above forecasts. I saw Zyvaller's at 83 cents, maybe even Zauer's 85, according to one source. That feels like a win.
Oh, it's definitely a significant achievement on the profit side. It shows they're, getting better at managing the business, controlling costs. That swing from a big loss to a big profit, that's real progress.
There's always a but, isn't there?
Well, yeah. For a company like Uber, which, despite its size, is still largely viewed through a growth lens,
Yeah.
the market often puts a huge emphasis on revenue growth, top-line growth.
Ah, okay. And that's where things weren't quite so rosy.
Precisely. Well, the profit was great. The actual revenue came in at $11.53 billion,
Yeah.
and the forecasts were a bit higher, around $11.59 to $11.62 billion.
So not a massive miss, but a miss nonetheless.
A small miss, yes. But it seems it was enough to worry investors. It raises questions maybe about future growth rates.
It's funny how that works. Profit's crucial, obviously. But for these kinds of companies, that consistent revenue increase is like the holy grail for investors looking ahead.
That's often the case. They see strong, steady revenue growth as proof of market share gains, competitive strength, and, the overall trajectory. So even a small miss can inject some uncertainty.
Okay, so that explains the stock reaction, maybe. Strong profit, good. But the market wanted that strong revenue growth to match.
Got it. But digging deeper, it wasn't all about that slight revenue miss, was it? Weren't there some really positive signs operationally?
Oh, absolutely. If you look beyond the revenue headline, the core business metrics look pretty strong.
Like the number of trips. I saw that was up significantly.
Yeah, trips were up 18% compared to last year, reaching 3.04 billion trips in the quarter. That's a huge number.
Wow. And what's driving that? More users? Are people just using Uber more often?
It's a bit of both, actually. They saw a solid 14% growth in monthly active platform consumers, MAPCs, they call them. That's up to 170 million people.
It's 170. Yep. And on top of that, the average number of trips each of those users took per month also went up by about 3%. So more people using it more often. That's a healthy sign.
Okay, and that fed into gross bookings too, right? The total value of everything booked through the platform.
Exactly. Gross bookings increased by 14% year over year to $42.8 billion. And if you look at it on a constant currency basis, which kind of strips out the effects of exchange rate fluctuations.
Ah, yeah, it gives a clearer picture of the underlying business growth.
Right. On that basis, gross bookings were up 18%, and revenue was up 17% constant currency. So the core growth is definitely there.
And this growth was across both mobility, the rides part, and delivery, like Uber Eats.
Pretty much. Mobility gross bookings hit $21.18 billion, delivering nearly $6.5 billion in revenue. Delivery was strong, too, $20.38 billion in gross bookings, bringing in about $3.78 billion in revenue.
So both core segments doing well. Any weak spots?
Well, the freight segment was a bit different. Its gross bookings actually dipped slightly to $1.26 billion, and revenue was also slightly down. So that's one area that didn't quite follow the trend.
Okay, so freight's a bit of an outlier, but the main engines, rides and delivery, seem to be firing nicely. What about profitability beyond that net income figure, like adjusted EBITDA?
Yeah, that looks really good, too. Adjusted EBITDA, which gives a sense of operating profit before certain items jumped 35% year over year to $1.9 billion.
Wow, 35%.
And crucially, their margin improved, too. Adjusted EBITDA as a percentage of gross bookings went up to 4.4% compared to 3.7% last year. Plus, they generated really strong free cash flow.
How much was that?
$2.3 billion in free cash flow just for the quarter. That's That's a lot of cash being generated by the business. It points to real financial health and efficiency gains.
Okay, so operationally, financially, a lot of positive signs under the surface. Now, I know the CEO, Dara Khosrowshahi, he's pretty bullish on the future, especially autonomous vehicles, right? AVs.
Very much so. He called AVs the single greatest opportunity ahead. And Uber's definitely making moves there, partnering with companies like Waymo, Volkswagen, Pony.ai.
It feels like a big bet on where things are headed long term.
It is. And it's not just talk. The sources mentioned Waymo vehicles are actually available through the Uber app now in Austin, Texas.
Really? I didn't know that was live already.
Yeah, and apparently there's data suggesting these AVs are outperforming human drivers on daily trips, at least in some metrics. And across the U.S., something like 1.5 million AV trips happen annually now. So it's becoming tangible.
Interesting. So they're integrating this future tech, even if it's not maybe a huge revenue driver just yet.
Exactly. It's part of their long-term strategy.
Okay, but it can't all be smooth sailing. Weren't there some challenges mentioned? Like a lawsuit from the FTC?
Yes, that's a significant point. The Federal Trade Commission is suing Uber over alleged deceptive practices related to their Uber One subscription service, specifically around how easy, or not easy, it is to cancel.
Ooh, that doesn't sound good. Especially since subscriptions are probably quite important now.
Hugely important. The CEO defended the cancellation process, said it's very, very simple, but the fact is, Uber One apparently accounts for 60% of Uber Eats bookings now.
60%?
Yeah.
Wow, okay, so yeah, any trouble there could definitely have an impact.
It's a regulatory risk they need to manage carefully.
And internally, I think I read something about return to office mandates and changes to sabbaticals causing some friction.
Yeah, there were reports of a tense all-hands meeting. They increased the required office days from 2 to 3 per week and apparently made it harder to qualify for a sabbatical needing 8 years instead of 5.
Hmm.
The CEO positioned these as necessary moves to be at the top of our game. But changes like that can sometimes, impact employee morale or lead to internal headwinds.
Sure, sure. Change management is always tricky. And circling back to the analyst for a second, didn't Investopedia mention some worries about how AVs might actually disrupt Uber's current business?
That's a really interesting tension, isn't it? The very technology they're betting on for the future could potentially undermine their existing driver-based model if autonomous fleets become widespread and maybe cheaper.
So how do they deal with that? Just hope their partnerships work out.
Well, the partnership strategy itself is likely part of the hedge. By partnering with AV developers like Waymo, Uber positions itself as the platform connecting users to rides, regardless of whether there's a human driver or not. They aim to be the interface for all kinds of mobility.
Gotcha. So integrate, don't get replaced. Makes sense. Okay, so looking ahead, what did Uber themselves say about the next quarter, Q2 2025?
Their own guidance suggests they expect the growth to continue. They're forecasting gross bookings between $45.75 billion and $47.25 billion.
And what kind of growth is that compared to last year?
On a constant currency basis, that represents year-over-year growth of about 16% to 20%, though they did mention a currency headwind of about 1.5 percentage points, so the reported number might be slightly lower.
Okay, still pretty solid growth expected. And adjusted EBITDA?
They're projecting that between $2.02 billion and $2.12 billion. That's a 29% to 35% increase compared to Q2 last year.
Right, so their own outlook is still quite optimistic despite the Q1 revenue miss and the stock reaction.
It certainly seems that way. Management is signaling confidence in the near-term trajectory.
So it feels like, okay, the stock took a hit after these results. But you mentioned earlier, year to date, Uber stock is actually still way up, right? Like over 40%, outperforming the market.
That's true. It's important context. Despite this recent dip, the overall trend for the stock this year has been very strong, which suggests maybe this reaction is more about adjusting expectations after a slight miss rather than a fundamental shift in view.
So the market's message is kind of like, great job on the profit, guys, really impressive, but we need to see that revenue keep climbing strongly and consistently. Don't let that falter, especially while you're investing in all this future tech.
I think that sums it up pretty well. Profitability is now expected, perhaps. The focus shifts back to validating the growth story, ensuring the investments in things like AVs are accompanied by continued expansion in the core business.
Okay, so bringing it all together then. Uber delivers this really impressive profit number, huge improvement, shows operational strength. But a tiny miss on the revenue side triggers investor concerns about the pace of future growth.
Exactly. It really highlights how much markets focus on that forward momentum, particularly for tech and growth-oriented companies. It's not just about the profit today, but the perceived trajectory for tomorrow.
It shows you really need to understand the nuances, right? The difference between profit and revenue, what the market prioritizes, how future bets like AVs play against current performance.
Precisely. It's rarely just one number that tells the whole story. You have to look at the whole picture, the context, the expectations.
Which leaves us with a really interesting question, doesn't it? Can Uber pull off this balancing act? Keep pushing hard on these futuristic, ambitious bets like autonomous vehicles, while also delivering the kind of consistent, strong revenue growth the market clearly demands right now.
That's the key challenge. And what does this whole episode tell us about what the market really wants from big tech companies in 2025? Is it just about the next big thing? Or is it about delivering solid, predictable growth in the here and now?
Definitely something for us all to think about.